Hi there, Nick Troiano here. Last week, after heavy criticism for the company's consideration of moving abroad, Walgreens announced that it would remain headquartered in the United States. But other companies have already left, and more are following suit. Since 2011, 22 companies have announced what are called inversions, when companies buy a foreign competitor and then reincorporate abroad to dodge American taxes. Inversions are the latest manifestation of what's wrong with our U.S. corporate tax code, which incentivizes companies to move themselves or keep their corporate profits overseas. That's because the United States has the highest marginal corporate tax rate in the world, at 35%, while virtually every other country in the world has been lowering theirs over time. Our broken tax code hurts the American economy by sending jobs and keeping investments overseas, and it hurts our federal budget. We now collect about a third of the revenue from corporations as we did just a few decades ago relative to the economy. This week, I released my second detailed policy paper on tax reform, and in it, I included one idea called the common sense corporate tax, as originally proposed by Dr. Larry Kotlikoff, my campaign's economic advisor. The common sense corporate tax would reposition the 35% tax on corporations to a revenue-neutral tax on corporate profits as they accrue on a shareholder level, where all corporate profits eventually wind up anyhow. Under this system, people above a certain income threshold would pay taxes on the profits of corporations they own shares in, just like people currently pay taxes on S corporations, proprietorships, or partnerships. This approach has many advantages. First, American corporations would no longer have any tax incentives to move their operations or keep their profits overseas, and that would help bring home over $2.1 trillion in corporate profits that are now abroad, and also bring home some more investment. This would help grow our economy and create more jobs. Second, the tax would be paid for by the owners of corporations who ought to be taxed. Unlike our current corporate tax, which many economists believe is indirectly being paid for by workers through lower wages or by consumers through higher prices on goods and services. Third, a simpler and fairer common sense corporate tax would eliminate many of the distortions in the market that are currently caused by our corporate income tax, which the Congressional Budget Office has said costs our economy between 25 and 64 cents for every dollar that it raises in revenue. The common sense corporate tax is common sense. It'd benefit government, corporations, and everyday Americans alike by cutting the deficit, growing our economy, and boosting real wages. Now it's time for Congress to act. As always, I welcome your questions or thoughts in the section below, and I look forward to seeing you again next week.